Good afternoon, and thank you all for joining us today. I am Nin Desai, and I will be your host. I started my professional career at Merrill Lynch with their private client group. At Merrill, we manage portfolios of high net worth individuals. While it was great to trade stocks and bonds, I was always curious about how these companies went public. Thus, after business school, I joined Pacific Crest Securities. PCS is a tech-focused investment bank with a global presence focused on software, communications, semiconductors, and internet and digital media. Here are a few transactions I worked on at PCS. In 2005, IPOs were at the peak, and it was amazing to take all these companies public. But that led to another question. How do VCs know what companies to invest in and which ones to take public? Thus, I joined Alpha Capital Partners. Alpha is a generalist fund with about $135 million of assets under management. My most recent transaction at Alpha was Circa, a software as a service provider company. The 2008 financial meltdown led to a liquidity crisis for entrepreneurs, companies, LPs, and VCs. Fewer IPOs in the market means no exit for VCs, no return for LPs, and as a result, venture funds are on decline. No new funds means less startup funding, low employment, and slow economic growth. Thus, on April 5, 2012, the Jumpstart Our Business Startup Act, or the JOBS Act, was introduced, which enabled crowdfunding for all Americans. And that's how NIN Ventures on Nin.VC came into existence. Nin.VC is a crowdfunded technology venture capital firm that is offering its membership interest under the JOBS Act and Regulation D of the U.S. Securities Act of 1933. We are a unique and first-of-its-kind fund that brings venture capital retail and gives people the freedom to directly invest in a fund with the amount of their choice, which also leads to a better financial reward system. This offering is made via general solicitation and general advertising, which is permitted by Rule 506C as contemplated by Title II of the JOBS Act. This rule came into effect September 23, 2013, and we were the first ones to go live with the website and videos about our fund. Nin Ventures also became the first venture fund to be seen on a billboard, which was followed by in-taxi ads and other social media facilitated marketing. Learn more about us on Facebook, Twitter, LinkedIn, or Nin Ventures TV. Since then, Nin.VC has been the recipient of numerous awards, and I was awarded 2015 CE of the Year Illinois for innovation and contribution to the venture capital and private equity industry, including Private Equity Fund Manager to Watch for 2017 by Corporate America. So what does Nin.VC invest in? Nin.VC invests in 3D printing, fourth industrial revolution, cloud computing, education software, and other path-breaking sectors within the United States. At Nin.VC, it all starts with a disruptive technology. A disruptive technology is an innovation that changes an existing industry and creates new value networks, displacing earlier technologies or way of doing business, just like how we are changing the venture capital industry. At Nin.VC, we invest in an entrepreneur because entrepreneurs build companies and not the other way around. Being an entrepreneur is the hardest job in the world, and entrepreneurs face varied challenges when it comes to taking the disruptive technologies to market. The few attributes that we look for in an entrepreneur is the ability to dream big, experience and expertise in the industry, ability to communicate with the team and outside, flexibility to adapt to a fast-changing environment, and certain personality traits like being focused, dedicated, disciplined, and hardworking to accomplish their goals. As long as the company has certain ingredients like a good management team, a disruptive technology, a viable product, a revenue-generating strategy that form a basic foundation that leads to long-term success. We at Nin.VC like to invest in companies that are going to stand the test of time. The market is flooded with various funding options from angels to VCs to crowdfunding portals. So how does one know which option to pick? I come from an entrepreneurial family, so I can speak on their behalf. Entrepreneurs are brave and courageous bunch that are determined to change the way an existing industry functions. On that journey, they need a lot more than just financing. They need guidance or domain expertise, help with PR and marketing, recruiting, viable exit strategy, and more often follow-up financing, which crowdfunding portals are not able to support. On the other hand, crowdfunding exposed investors to a whole new asset class, which the normal population never had the knowledge or expertise to invest in. About 99% of startups fail. On top of that, low minimum investments like $1,000 does not give them a say or a board seat, putting investors at a high degree of risk. At Nin.VC, we solve all those issues. Nin.VC provides diversification, we take board seat on all our investment, and lend the necessary support that an entrepreneur needs to build a business, just like they would get at a traditional venture capital fund. We're also in a position to gauge and be a part of the valuation process when it comes to addressing dilution and follow-up financing rounds. However, the most important part that investors care about is the ability to direct invest and enjoy direct returns, which is not the case with traditional venture capital funds. Most people have a traditional portfolio that is stocks, bonds, and money market. But historically, if you look at U.S. Venture Capital Index and S&P 500, U.S. Venture Capital Index tend to outperform S&P 500. And not only that, they have an inverse relationship, which allows true diversification and help mitigate risks involved in having only a stock or bond portfolio. Yale is one of the best performing endowment funds in the United States. Since 2008 to 2016, Yale has increased its asset allocation in private equity and venture capital from 20.2% to 30.9%, out of which 16.2% is venture capital compared to 13.7% in 2014 and just 10% in 2013. In general, most people have a three-dimensional portfolio. But if you look at Harvard and Yale's portfolio, they take the long-term approach and invest in alternatives like venture capital. Nin.VC is your gateway to this asset class, venture capital. So how does it work? There are a wide of options when it comes to investing in Nin Ventures Technology QP Fund, using checking, savings, defined benefit plans, self-directed IRA, and digital currencies. Self-directed IRA is a descriptive term that is used to describe how some IRA providers administer assets they hold. With a self-directed IRA, the client controls what their IRA invests in. Self-directed IRA allows investors to hold alternative assets within their tax-deferred retirement plans, such as private placement in venture capital. Like any IRA investment, a self-directed IRA has built-in tax-deferred growth, and thus an individual will not pay capital gain taxes on the growth of the investment. The return will flow back to the self-directed IRA and will not be taxable to the account holder. A self-directed IRA allows true diversification that is otherwise not achievable in a standard IRA portfolio. To invest in Nin Ventures using a self-directed IRA, you must first sign up on Nin.VC, verify that you are an accredited investor. Next step is to establish an IRA account with the interest group or a provider of your choice. Once the plan is established, you can complete the subscription and payment process on Nin.VC. Another option is defined benefit plan. A defined benefit plan is a retirement plan that can invest in a wide range of securities and investment products, including venture funds. Some of the advantages of investing in a defined benefit plan are all contributions made to the plan and subsequently invested are top-line tax deductible to the business, whether the business structure is proprietorship, LLC, LLP, PC, C Corp, or S Corp. The investment growth is tax-deferred under the umbrella of the defined benefit plan. The contributions might be significantly greater than that of the 401k profit-sharing plan to help increase the retirement savings account for the business owner. To invest in Nin Ventures using defined benefit plan, you must first sign up on Nin.VC, verify that you are an accredited investor. Next step is to establish a defined benefit plan with Robin Weingart and Associates. Once the plan is established, complete the subscription and payment process on Nin.VC. Digital currencies like Bitcoin, Litecoin, Dogecoin is emerging as an alternative payment and global currency. We at Nin.VC understand the significance of this change and also let investors invest in our fund using digital currencies. Let's go through the investment process step by step in detail. The very first step is to go to Nin.VC and sign up. Sign up is simple: first name, last name, email, password, and acknowledge that you are an accredited investor. Once you sign up, you get access to our marketing materials, that is PPM, investor presentation, and other suggested readings. You get invited to attend our calls and events. You can also schedule a one-on-one meeting with us at our office or online via Skype. Once you decide to make an investment, accept the risk and disclosure statement that will explain what venture capital investment is. The next step is to verify accreditation. Once that is in order, it's only a matter of filling out a subscription document and a W-9 form on Nin.VC. The last step is payment, and it's as simple as selecting the payment method and the amount you wish to invest. So how can you be a part of Nin.VC? One must be an accredited investor and verify themselves as an accredited investor before they can invest in the Nin Ventures Technology QP Fund. An accredited investor is an individual with an income of more than $200,000 per year or a joint income of $300,000 in the last 2 years, or has a net worth exceeding $1 million either individually or jointly with his or her spouse, excluding the primary residence. For an entity, any trust with total assets in excess of $5 million qualify. There are multiple ways to verify if you are an accredited investor. For an individual, it's income, asset, and third-party verification. For entity, it's asset and third-party verification. Recently, the SEC approved Title III Jobs Act equity crowdfunding for non-accredited investors, which allows any U.S. citizen, regardless of income, to make direct investments via a crowdfunding portal. However, investment in a fund like ours is still limited to accredited investors. Given funds are a less riskier asset class compared to crowdfunding in companies directly, perhaps it's time to revisit their investor eligibility, alter the definition of accredited investor, and make crowdfunding available to all. As of now, Nin Ventures is only available to accredited investors. Please note that venture capital is a high-risk, high-reward investment vehicle, and we strongly recommend reviewing the other suggested reading on our website before making any investment decisions. Once again, thank you for being on the call. Sign up on Nin.VC to begin your investment process, and feel free to reach us at contact@Nin.VC or 312-953-0930 to schedule a one-on-one meeting or with any questions and material requests. Have a wonderful day and happy investing.